Good day, everybody, and welcome back to Markets for Millennials for the weekly wrap of November the 15th through the 19th. And I'm coming to you on a Saturday. Sorry about the day delay. And what I wanted to do was start off here on the Dxy US Dollar Index and talk about kind of the big thing that's been going on the last few days with the dollar breaking out of its multi month going back to 2020 sideways range. This was the spot if we go back to the crisis we had on March 9th. The dollar peaked down to approximately this 94.70 level. And then obviously we had the milkshake where we ended up going up to a high of over 102, almost 103. And then the dollar came down ever since then. We went sideways for over a year, and now we're back on the way up. And after a couple of down days on Wednesday and Thursday, Friday was a big up day, 0.5%, which is a pretty big move on the dollar. And we keep toying with this overhead resistance, which I have right here on the screen. You can see the kind of the top part of this channel here, which has gone all the way back into May and June of this year. And it's interesting because you could see that, your placement, you have to mess with your placement on your trend lines. You have to be willing and flexible and tweak them when necessary. And this is what I think the market is respecting here on the daily chart. We saw on Wednesday, after a brief move up past the overhead resistance, that's what that we ended up getting rejected. And then yesterday on Friday, we came above again. I believe this was overnight. I want to double check. Yeah, it was overnight during the London session that we peaked above, and then we came back down, and then we came back up to end the session. And so we ended right up next to the upper part of this trend that we've been in. And so obviously, I think when I updated previously, or actually because it's been over a week, I had talked a while back. I don't know why that's green. That's really odd. I had talked a while back about wondering if the dollar would stay in this range underneath 94.70. Obviously, it popped above, and we have been right here brushing around the top. And so I think the big question on a lot of people's minds is, are we going to continue to move higher? Are we, a lot of people that have this trend line, are we going to break above, retest it, and resume up? And is this leg up going to be steeper? And that's a really good question. What I do know is the dollar could, come off quite a bit. We could come down and either retest the lower trend line, or this horizontal support. Neither one would be all that surprising. And I think that kind of move, if we go from where we are, where we closed yesterday, that's almost a 1.5% move. Entirely possible, but still, this is an uptrend. And because we've broken up above 94.70, the trend is, we can't even say that we're in a long-term downtrend really anymore, because we're, at the lower end of a range that we have been in for a really long time. This is going back into 2018. So we still could continue to go up, even if it looks like this. We still could go up, or we could stay near the top. We could bust above. And I do want to point out over here, when I first put the trend line here, I want to point out that we had this quick move up, very similar to what we just had. And then when price came off, it didn't come back down and touch the lower trend line again for another couple months. So between June and September, it didn't touch the lower trend line. So it's entirely possible that we could just grind up in this kind of narrow range within the prevailing trend. You should not chase this to the upside. The thing with the dollar, I don't trade the DXY specifically. I'm more into the currency pairs, and those obviously they don't all look the same as the DXY or inverted against the DXY. But this is something definitely to be aware of, and I mean, it's hard to really know what's going on here because over the last couple of days, you've seen the DXY up, you've seen equities up, like we've been melting up on the Nasdaq, on the S&P, on the Dow, although we've kind of given a lot of that back lately, and then on the Russell, but we gave that back as well. Really, the S&P and the Nasdaq just continuing to march up, and I suspect part of the reason is that I think a lot of people are guessing that the Fed can't afford to allow the dollar to strengthen that much, because remember the DXY is relative to other fiat currencies. So I'm wondering if the markets are pricing in the Fed having to step in, it's really interesting because yields are not really up. The yields are not even close to their all-time high, or not all-time high, excuse me. Their highs over the last couple of years, over the last year and a half or so, and so it's weird to think. Like I feel like I've seen those comments from people that they're expecting the Fed to come in and have to do more QE in order to push the dollar back down, and I just don't. I wonder if that's why. Because if let's just take a look really here at the equities, because what's going on here is you have the Russell, which broke out. I talked about that in a video a while back. It broke out finally, and then it came down on the retest, and then it started to come back up, and then it has not made a higher swing high, I should say. It's actually coming down. So there's a couple of different ways you could look at this. You could obviously put a trend line, like right there, and then wait for price to break this trend line. That would be the more advanced entry. Or you could wait until, wherever it happens, you could wait to take a trade until we clear this overhead, this horizontal resistance level. But I do want to draw your attention to this white line as you follow my mouse across, because as I was looking at this earlier and I saw this coming back, I expected, to be honest with you, if I zoom in a little bit more, I expected, one of these candles to come all the way down and touch the level, but it didn't. And I just, at the time, thought, okay, well, it's just going to, resume up and be on the way up. But actually, again, we failed to make a higher swing high, and we've rolled over. And I wonder now with this white line here, what I did was I just connected the peaks of these wicks, and you actually see we got a perfect touch right here on October 26th. And if you're going off of this line, then I wonder if what's going to happen over the next few days is if, because this move was so swift, if we're just kind of back testing this level, and then we're just going to resume back up. That's what I'm wondering. But obviously this action on the Nasdaq, I mean, as the Russell and the Dow are pulling back, which have a lot more cyclical stocks in them. The Nasdaq and the S&P, which are very heavily weighted into the growth, and the growth stocks are making all-time highs or near all-time highs. So you have the Nasdaq closing at an all-time high. You have the S&P, which after closing at an all-time high on Thursday, closed a little bit below that all-time high on Friday. And I'm going to jump really quick over to my SPY growth versus SPY value that you could see here. And you could just see her price in terms of growth versus value just really taking off, reflecting really well what you're seeing when you look at the Russell and the versus the Nasdaq. And then also the Dow. And you're just getting the idea that the growth side of the market is really outperforming. And so, in fact, the SPYG versus SPYV is making, I believe this is an all-time high that it has been making over the last couple of weeks. I know I haven't looked at the sectors in a little while, Let's take a look at the technology sector. You can see here that this price action has just been really, really hot for the last couple of weeks. I have this trend line here, which is showing you, the momentum that's going up, increasing price, and it's just pretty interesting. And then I believe, let me find, consumer discretionary is also on the rise. And I thought that was interesting because I think what's happening is the XLY and the XLK can both be technology heavy because, like, for one, they both include things like Tesla, Amazon, and whatnot. And even though I know, if I know Tesla has been had this really big move, came back down, but Tesla's coming back up. And if I recall, Amazon is getting real close to its all-time high. You have Apple at all-time highs, and let's see here. Google near all-time highs. Facebook's been coming down. But anyway, you just get the idea that obviously the movement is very, very heavily concentrated. And I think that's why specifically those two sectors that I mentioned are the ones on the move. So this is actually, to me, a little bit concerning. Now I want to show you what I did here. I used to have a different set of trend lines on my S&P chart, but what I've done this time is I've taken the peak from September 2020 and then basically tied it to some of the peaks in April and May of 2021, and then where we touched in September of this year. And then you could see that we kind of came really close to touching that on the way up here. And so I think that's going to be an interesting level to watch. And it's for this reason. And I know I've said this a lot, I'm not chasing the indices because I don't think that's the best play right now. And I don't want to take a position chasing momentum. I mean, if you had added like down here, that would have been a pretty good trade. There have been places along the way where if you were just trading, or if you were even long-term holding, it would have been, just fine. But I'm not doing that because I'm taking advantage of other things in the market right now. But I think that's an interesting line to watch. And the same thing on the Nasdaq. Now, a couple of things actually on the Nasdaq. Let me see if I can put these lines in here. I had done that previously on the Nasdaq. And so you actually see that we popped above it, popped down. Because of the way that line looks, I'm just not convinced that the market actually is respecting that line. And so that's why I had it off after all. And then what I actually did was I connected kind of this peak area from August, September this year to this wick low from November the 10th, just 10 days ago, and took a look at that, and then I cloned it and then moved it right here, and I got some really good touches over here. So I think the market is, at least in part, respecting cloned lines, at least to a degree, or has been. So I think that this ascending line is more likely to be a support level to buy off of than perhaps a horizontal level that I'm seeing a lot of people putting, right here at this at the bottom of this red candle. So that's the look at the indices. I'm not chasing them, but I am interested in what happens on the Russell and the Dow as it relates to these kind of descending trend lines. Here you see we already had a retest on the Dow on that descending trend line, the very shallow one. And I wonder, are we coming down to test it again? We got a perfect close on the horizontal support, which was resistance that I had from the August 16th high. So looking for over the next few days, will price resume and make a higher high? Or are we going to come down and test this trend line and then move back up? But I'm cautious on equities. Jumping over to Bitcoin, I've got a couple of things that I'm sharing here. As of right now, when I'm recording this, we are down a couple $100, but a lot of people thinking that we're going to go considerably lower. Some people are looking at this trend line right here, which goes back to the mid-cycle low, the low of wave one. So some people are looking for us to get down there. I personally think that Bitcoin is going to move back up, and this is wrong. I'm actually looking to see price get back up next to near all-time highs, somewhere in this blue box, somewhere in that vicinity. We should get up and at least be flirting with all-time highs. And I think we're at the point where we can start to say that if we're going to peak in 2021 with Bitcoin, then you are going to begin seeing the liftoff parabolic move. Sometime over the next few days, you'll see that really taking shape. And in the previous two cycles, it was between 30 and 35 days for price to peak once the liftoff move started. And so that's well within range to get us a mid to late December blow off top. And so that's still my base case, and that's what I'm looking for. So if you're in a position of strength, then you are in no rush to have to do anything on Bitcoin. You can just sit tight. If you are swing trading, then obviously if you missed this entry, then the next entry would be this trend line right here, or obviously you could take the break of the old all-time high as well. Then shifting over here to gold and then silver. Gold and silver had a couple pretty good moves over the last few weeks. Silver actually has closed down underneath a horizontal level that I marked. I'm not so sure that level is that important. I'm actually on silver watching this area right here because that is where I made this ascending trend line from. And so I'm looking to see if that is going to hold, if silver is even going to touch that. But gold and silver are trying to make moves, and a lot of people wondering if now is going to be the time for precious metals to start making their moves to the upside. I'm still not really that interested, but that's just me personally, again, because I'm doing different things in my investing and trading. But just, again, giving you this look. I still won't be that excited until silver gets above, this yellow line right here. It's about approximately 2670 or 2680, and then on gold, we're getting close. I want to get above 1900, but specifically 1916, which was a swing high back here. The big picture, I still I go back to the thought that maybe my analysis previously about cup and handle potentially forming on a very long time frame still could be happening, but obviously I'm not holding my breath for that. It's just something that I'm trying to be aware of just in case. I'll take a look at oil really quick. Oil, after having some big moves up, if you can kind of see some of the trend lines that I've been working with, we are coming down now. We're correcting, and to me, this is no different than what we were seeing back between March and then August, where you had some good moves up, and then you had a good long consolidation and retrace. And I think that that's going to happen here. So again, just using the principles, if you want an aggressive entry on crude oil, if you want to take long positions, then you wait for the break of this trend line. And then if you are looking for a little bit of a safer entry, then you wait for the break of this trend line. Those are just the smart things to do. Obviously, nothing I say, I'm not a financial expert or trading expert or anything like that. So you got to take what I say with a grain of salt and do your own research and make your own decisions. But that's the way that I would play it if I was going to take long positions. Remember, you don't want to be chasing momentum either to the upside or to the downside. And you don't want to be so married to a position that you are going to either miss out on price moves or sell too early or buy too early. And you don't want to be so married to a view that you're unwilling to let price show you what's going on. And the reality is that, I may not think it's sustainable the way that especially the Nasdaq is moving. But I mean, how many of us have been saying that since basically back here? And as long as the Fed's balance sheet keeps expanding, even if they are tapering their QE, it's still their balance sheet is still expanding. It's not contracting. Even if they're tightening what they're still spending. And I think that that's really the key here. And so I think as far as narratives go, what I'm looking for going forward is are the markets pricing in another deflationary spiral or situation where you're going to see maybe you see equities correct in general, but if you think about it, like back here, we had this deflationary event happen with the COVID crash. And then as the Fed stepped in and started doing QE, the outperformer during this period of time was tech and the Nasdaq specifically. And so what I'm wondering is, are markets beginning to expect that we're going to get some more QE, that the Fed won't be able to continue to taper, or that they'll actually push off rates raising, and then are we going to get tech and the Nasdaq outperforming for that reason? Or I'm also wondering if this is a melt up that is then going to end up with a considerable correction, very similar to what we saw in 2020 on a couple of occasions, both in September, October, or September and October. So those are the things I'm thinking about. Those are the things I'm watching. And so that'll do it for today. I'm going to jump off today, and I will see you guys next time. So if you thought this was helpful, go ahead and like and subscribe and share, and I will see you guys next week.